Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to have a look at positive first quarter results and what that means for the market for the year. We'll also give our thoughts on stocks like AFG, CIMIC Group, Appen and Bravura. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading along with answering your questions and looking at stocks for you. Hello, I'm Dale Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now before we move on, thank you for showing your support for our channel and hitting that subscribe button. And remember, as you subscribe, you have to click the bell on the right of it so you know when we update our latest videos. Also remember to tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Time, because this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your most burning questions. Now, history dictates that if the stock market is bullish in the first quarter of the year, then it's likely to end the year in positive territory. Now, over the last 7 years, statistics on the Dow Jones Index confirms that if the first quarter of the year is bullish, it will almost certainly have a positive gain for the year. Now, whilst I don't have the statistics for the Australian stock market, it would be reasonable to assume that a similar pattern would apply here. In the first quarter of 2021, the Australian stock market rose 2.43%, while the Dow Jones Index, that rose over 7%, or around 4 times more than its historical average. Now, whilst this is very bullish, most of the gain occurred in March of this year. Now, interestingly, the tables have turned slightly, given that the All Ordinaries Index has so far risen around 60% more than the Dow Jones in April. So, what can we make of this? Well, as we know, the markets ebb and flow, and despite the Dow Jones performing very well in the first quarter of 2021, this doesn't mean it will continue to rise at the same speed for the remainder of the year. The same can be said for the Australian market, as it's quite possible, given the modest gains to date that we have made first part of this year, that we will see it pick up in speed in the second half of 2021. Now, in reviewing the results of the Australian stock market in the first quarter of 2021, financials are up 11.32%, consumer discretionary, that was up 7.44%, whilst communication services is up around 7.05%. Information technology, on the other hand, is the worst performing sector in 2021 as it's down 11.53%, although in the first 2 weeks of April it has risen nearly 15% on the back of strong gains from Afterpay and Xero. As I've said in many previous reports, I'm confident that the energy, materials and financial sectors will do well this year, so it will be interesting to see how the market unfolds from here. Now it's time to talk about the market, so let's get into what were the best and worst performing sectors last week. Once again, information technology was the strongest performer, up 4.35%, followed by healthcare up 1.9%, followed by materials up 1.47%. Now, the worst performing sectors included utilities, down over 2.54%, followed by energy, down 1.17%, and industrials, that was up just 0.02%. Now, the best performers in the S&P ASX Top 100 stocks, they included Altium up 8.40%. That's followed by Xero up 5.93%, and Ampol, that was up 5.41%. The worst performing stocks, they included Origin Energy, down 9.7%, followed by TPG Telecom, that was down 5.67%, and AMP, that was down 5.56%. So what do I expect in the markets moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me.
A quick reminder before the video starts. This report is an educational tool, and as such, your personal circumstances have not been considered. We hope you enjoy this week's report.
Well, once again, the Australian stock market was bullish last week. It really has decided on its direction, which is up. But we do need to look at how bullish is it going to be, how long is it going to go up, and what stocks could we be looking at as it's moving up, because there's some stocks looking okay at the moment. But I want to bring up the monthly chart, because we always need to remember we need to go back to the bigger picture to see where we are and where we're likely to head. So on your screen right now is the monthly chart of the All Ordinaries Index, and it's one that I've brought up many times, and I've not changed a thing on this since the last time I brought it up on these reports. Now, looking at this, we can see how bullish it is, and as you can see here, the market this month so far has hit a high of 7331.1. Now, people who have looked at my reports I've been talking about the market probably hitting about 7,600 points. Now, this may seem a little bit strange for some people about hitting 7,600 points, but it's only about 270 more points to go. Over the next 4 to 6 weeks, I think it can do that if it remains bullish, because any move up now, I think it's going to happen. It's going to be short and sharp. It's not going to be a long-term sustainable. Now, I want to show you a couple of things. Now, just looking at this. Now, you remember I've got this momentum line, the big solid grey one, and you can see how far that goes right back to 1982 and how the market moves up and comes back to it. And it floats all the way around it all of the time. So eventually it will come back and hit this grey line again. I don't think it's going to do that anytime soon, but right now we do need to be cognizant of the fact that eventually it will come back to this sort of long-term average. But the shorter-term move, this momentum, this smaller dashed grey line, you can see I've just drawn it off that 2009 low, or the GFC low. From there. Now, it's really flying away from that GFC low. Now, looking at this one here, that was the move out of the GFC, which is a very, very, very strong move on the GFC there. And if I grab that, and let me just drag that over and compare it to what's going on at the moment, you can see, look at that. It's going on exactly the same momentum as what happened out of the GFC. The market repeats these moves all of the time. But out of the GFC, we're looking at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 months to there, but only about 10 months to that first peak. Now, looking at this, if we're over here from that March low there, we're well over 12 months through this move. So this is a really, really strange move that we're seeing here. Now, I know people say to me, Dale, you didn't pick the COVID low, and you were telling people to stay out of the market through here. And I understand why people are saying that, because, yeah, I was saying to people to stay, it's quite dangerous, the market. And to me, it's always about risk. It's not necessarily about, yeah, the market's going up, jump into it. I know a lot of people jumped into it and make money. And this is a time where retail investors through here, they did make money, and some of them made money through here as well. And good on you. And I really do support that if you've made money. But what I'm suggesting is this is not a normal market. It has not been normal. We've never seen a move down so fast in so short a time, never in the history of the All Ords. But we've also never seen such a sustained longest move out of this, out of any sort of move. Even in the GFC, we moved down. We made a low here in March. It moved back up for 2 months, and then it fell away again. That's what I was expecting for the COVID low. I was expecting a move up and then another fall away to its eventual low. That's what normally happens. This V shape on our market it's never been happened before. So I was picking the peak. I was telling everybody all the way through here that the peak was happening and we're going to get a market fall. I didn't expect it to be so big, because this is an event-driven fall. It wasn't a normal fall. A normal fall would have been sort of 8 to 12, maybe 15%. So we probably could have come down about half of that way, possibly to this line here, and then started to move up again. We just got this bigger, deeper move. So yes, I didn't pick this, and that's okay. But it really is, to me, it's about getting it right most of the time, which I am most of the time. I'm getting it right. Right now, the market is moving up. I do expect this move to be short and sharp. I don't expect this speed to keep up, because the market basically just runs out of money to buy. And what we're seeing here is this last sort of move through this all-time high, and a lot of this money coming in. Now, as I was saying last week, I would have preferred this to come down a little bit more over the last month or two, and have a low somewhere around this sort of blue line. That would have meant the rise up is more sustainable, and that's all the difference is right now. I think it's going to be short and sharp for the next 4 to 6 weeks, roughly. And I'll just bring up the weekly chart so you can see that. So there's big move up here. So I do think it's going to continue to go on up. But since this low through here, it's 6887. That one was not. That was 885. So we've had 1, 2, 3, 4, 5 weeks up. We probably have 1, maybe 2 weeks down, either this week in the next week, and then move on again through into May. Maybe a little bit longer, but I do expect our market to come down into the third quarter of this year, and it'll be a bit more of a heavier rise. So this is moving up quite strongly right now. Yes, technology stocks moved in the last couple of weeks, but they're not going to keep up that speed. I don't think they can do that. It might be a little bit of FOMO, or people jumping in on stocks that had risen quite hard. So be selective in the stocks that you have at the moment. Make sure you're getting good quality stocks into your portfolio, and just expect that the market's going to have a short, sharp run up, and maybe for 1 to 2 months in that sort of time frame before coming down into low. So anything if you have a medium to longer term outlook, look at really good quality stocks, look for the stocks that have been coming down for a little bit longer, and look for good fundamentals and look for them to go into nice solid trends. If you're looking more shorter term, it gets a little bit higher risk because you're trying to pick bottoms and tops and you need to get out at the right time. And again, everything to me is about risk. It's not necessarily about is the market going up or down. It's about what risk am I taking being in the market. And sometimes I don't get into the market even when it's going into a new all-time high because the risk is too high. And that's what a lot of people don't understand. And I know I get people, making comments on some of our social media saying, you don't like retail investors, Dale. I go, no, I do love retail investors. That's our clients. All of our clients are retail investors, or nearly all of our clients are retail investors. But I need to be honest with people about what I think the market's doing. And what we find is the people that make the comments are the ones that really don't fully understand the market properly, and they don't like that I just call a spade, and I'm quite honest about how retail investors make mistakes, and I need to call that out so people can learn. But they are overwhelmed by the 99% of people go, Dale, you're talking about me. This is me. And those are the mistakes that I've made, and thank you for bringing those up. So I'm going to keep doing that. I'm going to keep telling the truth to people. Because the more people we can help, whether you become clients of ours or not, it's irrelevant to me. It's, as long as you're trading and investing better and you're getting better results. That's really why we do this. Now, I do need to get into our questions for the day, so let's get into those right now. Now, the first question we have today is from Chris, who says, "Hi Dale, I've read both of your books, which have helped me greatly. Would love to get your thoughts on AFG, or Australian Finance Group. I bought this stock using your trendline strategy at $1.58. It recently hit the trendline and bounced off again. I plan to sell if the stock price falls and closes below the trendline, as this is a strategy I interpreted from your book. Is this a wise strategy to be using, or have I got my chart analysis all wrong?" Well, let's go and have a look at it, mate, and I'll see how you've got on your trend lines. But it is a great strategy. Now, trend lines are not going to work 100% of the time, so you need to understand that no tool, no analysis works 100% of the time. It's only probability. So, on some stocks, trend lines work a lot better than other stocks. It just depends on the type of stock it is, the liquidity of the stock. The more liquid, the better. It is better with trend lines. If something is very illiquid, then other techniques will work a little bit better because of the volatility that is associated with something that's more low liquid. But let's go and look at Australian Finance Group on the charts. Now, on the left is the monthly chart as normal, and on the right is the weekly chart. Now, there's a couple of things straight away I see with this. I remember when these guys set up back in the 90s, AFG, and you can see their whole history through there. I remember some of the directors, I knew some of the guys when they first set it up, and it's had a huge fall all the way through in that GFC, because obviously these guys are mortgage aggregators. Basically, they have a lot of mortgage brokers that use their services to, obviously do the bank loans, etc., for housing. So obviously the GFC was a big hit for them. It's moved up quite nicely, did quite well right through to February last year. Got hit slightly with the GFC, but struggling right through here. You can see this is an area, the whole level of resistance for them right across through here. Not closing above it. If I drag that up, you can see if I put my cross here, this here is about, that level is the highest close it's had in this whole period. So it is finding some weakness through there. So you would be wise to look at that trend line. Now, there's a beautiful trend moving up in here. We've had one downward bar into March, but let's now go and look at the weekly chart, which is what you were talking about with your trend line. I'm going to draw a trend line on that. So if I just put a line across here, you would have drawn a line right across there, and you can see it moved below the trend line. So I'd be sticking with this at this point in time. You can see you've got a couple of closes below there, but really right on the line right here. Now, last week it was bearish. This is a lower peak, but I would suggest it's probably going to start to fall below this a little bit, and you might get your two closes below. But don't jump too early, because I've had stocks do this for me in the past, and you might find this coming week, it's a green bar and moves up again. So stay with it at the moment. Stay with your rules at the moment. But I think that what you're looking at in terms of the rules that you're mentioning following my book, great rules. I think they'll do really well for you on this stock. So congratulations from reading the book. Congratulations from applying the techniques. And that's really what I was talking about a little bit earlier. It's using some of these solid techniques. You'll get far better consistent results. Yes, sometimes people without education will guess. They'll have FOMO. They'll do all sorts of things, and they'll get better returns than you might be for 3 or 6 months or something like that. But longer term, every year after year after year after year, if you have good solid rules, you've got good solid strategy, you understand risk, you understand money management, you understand all the things in my books, you will be a far better investor and trader than other people that spend most of their time in the buy and pray method or guessing. So keep up the work and keep practicing the trend lines and keep working on stop losses as well. That's really, really important. Now, the next question we have is from somebody called Dane, who says, "Hi Dale, would like to get your view on CIMIC Group. I don't currently hold the share, but I'm looking to purchase the share. It's a bit of a falling knife at the moment. Do you think trend lines would be a valid strategy to use for the entry?" So let's go and have a look at CIMIC Group and look and see if we can do some trend lines on that and whether that's a really good strategy on this stock. It's quite interesting that we got two comments or two questions on trend lines in the same month, but here you can see it is a falling knife at the moment, or has been a falling knife, with that little high back up in 2017 at $52, currently down at around $18. So you can see here it is a reasonably volatile sort of stock. It does move in these really strange, weird ways. It's more of a trading stock, not a buy and hold stock. But if I use what we're talking about earlier, like with my momentum, if I go back here, let's say to some of these lows through here, and just draw it across here, you can see it's just really come back to that sort of momentum line that we talked about as well. So it really hasn't broken below it. All the closes are right up in around here. Now, this is sort of its lowest close that it's had since way back through here. So it is looking okay at the moment, but not brilliant. Looking at it from a trend line point of view, I'd have to test it on a weekly and a monthly chart for there, but it might be a little bit harder for you on trend lines. I would use them on this stock, yes. Right now it is a bit of a falling knife. That's an interesting one, the COVID low, where it just drove down and came closed right back up here. This is some of the stuff that we teach in our, even in our beginners course, our trading, your trading mentor course that we have. It's a really inexpensive, cheap course. I answer all the emails from everybody to help you out understanding it. But this is some of the stuff we teach in here about where the opens and closes are, the bars, what they mean, how they mean, what they should mean to you, how the market's going to unfold or the stock's going to unfold into the future. Really good, solid information. But it's not wanting to fall away here at the moment. We're seeing this sort of opens and closes, really tight, short bars. What does that actually mean? And right now I think it is bearish, but I think I wouldn't be getting into it. You've been right to stay out of it at this point in time. I'd wait for it to find some support. I'd wait for a trend line entry on it, and maybe you'll get one. Maybe you won't. Maybe it'll just keep falling away. Maybe it'll go sideways for a while, but don't jump to it soon. There are plenty of stocks at the moment that have some trend lines on them that you might be able to use to purchase the stock. And specifically, there's a whole lot in the top 100 stocks if you go and find all those. Now we have a question from somebody called Jash. And they've said, "Hey Dale, thanks for your videos. I'd love to have you to have a look at Appen. After a booming 2020, it's come back significantly. It might be finding some support at its current level. I'm not currently in it, but I'm considering doing so. Would love to hear your expert opinion on where you think the stock is likely to go." I actually quite like Appen, and you are correct. It had a booming 2020 and it's come on off, and there's a few of those technology stocks did come off. Let's look at here. There's left-hand side is the monthly chart, and you can see after the big high there back through when it was August 2020, it just has fallen away quite dramatically. So it was up at $44 there, around 40, was it $43.66. It's down at $16. Normally when you see a stock fall that heavily, it will continue to fall a little bit more. And I'm going to put a little bit of a tool on here. No, I've forgotten where is it. There it is. I'm just going to put a bit of a tool on here, and you can see here, looking at that, that's half of its all-time high, $21.83. I would suggest it may find some support, but it's likely to go down to this sort of $10, $11 mark, and that's really what you have to be careful of at this point in time. Now, it may find some support on these previous, if I do a horizontal line, put across here, it may be finding some support on here. This could be a brief support, or it could be it has found some support at this level and will start to move up. And right now it's in the too early to buy stage, but you should be looking at it. But looking at the weekly chart, now we can see it's moved down in just a really, really nice trend. If I get my trend line on here and I just whack my trend line tool on here and just, you might get it on there, and just draw it straight across, you can see it just keeps coming back. And that's what stocks do. They move down, they come back, hit their head, move down, come back, hit their head, come down, move back up, hit their head. And it may do that here It may not. We may see it come back further down. And this is where I find a lot of retail investors see a stock moving up. And I'm not suggesting you're doing this. And they go, wow, it's really cheap. It was 40, whatever that was there, was 43.66. It's now $16. Let's jump in while it's cheap and get it for this run. But what they may be doing is just jumping in only to see it just do this and then fall away down and do that. That's possible, which has happened through here. It's happened through here. So this is an area to be careful of. Now, last week it wasn't looking super bullish through the last couple of weeks. So if we do get a red bar through this or a down bar through here, then I would expect it would fall through that sort of level, and it may go down to that level that I was mentioning in my previous report. But stay with this stock. Stay, hold it. Look fundamentally, look at what its future is and wait for it to find some support. Don't jump too early. That's one of the biggest sins that I find traders make, is they jump way, way too early for fear of missing out on it. And I'd rather give up money on the bottom of the move, maybe 10 or 20, even 30% off the bottom move, to get in at a safer place. And again, it's always about risk to me. If I can minimize the risk, I have much more chance of getting it right more often. And if I get it right more often, I'll make more money and I'll lose a lot less. And I find quite often people will try to jump too early, trying to eat the last few cents out of a stock, and it's not really a smart investing technique. But thank you for your question. Now, the next question is from Tim, who says, hey Dale, I bought into Bravura or BVS at around the $3.20 mark. It has since fallen away a little bit and is currently starting to move up. Would love to hear what you think about the stock and where it may be heading. So let's go and have a look at Bravura. I'll bring that up on the screen right now. I was looking at this the other week because I didn't think it was too bad, and it was starting to get interesting to me. So I like that you've picked, and I actually love all the stocks that you guys have picked this week. They're not really cheap stocks in terms of illiquidity and really high risk, maybe the micro cappy type stocks. I do like this. This thing's been falling away since May 2019 in a big steady downward move. So I like it. It's probably not necessarily hitting any sort of support levels. It's just had a couple of weeks up, and even this is not looking super strong right now, April, but we're only halfway through April. So it'll be interesting to see where it finishes April. So I'm not 100% behind you in saying it's finding some support. What you're looking at is just a few short weeks through here, which, as I said, can happen quite often, where you get this move up or a move up and then it falls away again. We need to make sure this is really definitely finding some support before we start to get into it. So it's not about just saying, hey, it was up at around $6, $7 through here. Now it's only around the $2.50 mark. I'll jump into it. Now, I think you'd probably jumped a tiny little bit early, but hey, it's looking good. If I put my trend line on there, where's my trend line through here? You can whack a trend line on through that there. It's looking all right. So if it does continue to move up strongly through here, just put a stop loss on it. And I don't think it's too high risk, but I think it's a little bit too early, if that makes sense. And I can't really explain it to you because I did go into a lot of technical detail of why I think it's a little bit too early. But I think just make sure you've got a stop loss. So put the line in the stand because you do own it. Once you've got your stop loss set, if it moves up, stay with it. Then have a trailing stop loss underneath that so you know when to exit. And if it does break your stop loss, just sell. Put your money back in the bank and then wait for it again, because I think this stock will be a good stock in the weeks and or months and or years to come. But right now, as I said, I think just a tad too early. But thank you to everyone for sending in their questions. I really do appreciate you taking the time to ask our opinion on what you or stocks that you have in your mind or have in your portfolio. Now, as always, we do give preference to subscribers, and so I could not answer everyone today. Now, it would surprise you to know that most of the people asking questions are not actually subscribers to this channel, which I find quite interesting. Now, it seems to me that you want our help in answering all your questions for you, but so how about you helping us by subscribing? Just click the button. Just click the subscribe button. I know it annoys you, some of you people saying, hey, click the subscribe button, but hey, that's how these videos grow and we get to talk to more people. So if we're answering questions from you and you're getting value out of these videos, then just hit the subscribe button. It costs you nothing. It doesn't even hurt your finger to do so. So please do that, and you know that you're not only just helping us to help you, but you're also helping other people find our videos so we can help more people and help everybody understand the stock market better. And if you are sitting there just watching this video and have any questions you'd like me to answer, just stick them below and we'll try to answer them over the next week, or do that in next week's show. Now remember that here on this channel we do these Monday market reports each and every week. We also do our live stream every Tuesday, 7 to 8 p.m. But thank you for taking the time for watching the video. We'll see you back here again next week. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.